Hey, welcome everybody to BitBrothers Crypto, a channel where you find the news, the best that is happening in the cryptocurrency market every day. Bear market, bull market, we always here trying to find the best way to survive these crazy times. Okay, guys. Yeah, you say, crazy times on the bull market. Yes, bull markets is crazy times as well. We need to maximize our profits. And now as well, guys, taking the opportunity to maximize our profits. What would be the best strategy now? Yeah, so a lot of people think, bear market, there's not much to do. Okay, what should I do? How do I invest? Where should I go? Blah blah blah. Okay, and today we're gonna talk a little bit about that. So if it's your first time here, subscribe to the channel. Don't forget to smash the like button. And yeah, Casca will be coming joining us very very soon. Okay, and our other bitch brother, and we're gonna go and talk about the market, and I'm gonna give you some insights of what's happening, and then you can send us your questions, and you can, Casp will be finishing off the live with you. Okay, so guys, today our market cap is at $900 billion. Okay, Bitcoin at 20,500. Ethereum holding strong above $1,000, which is very, very good. Binance at above $200. XRP at 32 cents. Solana holding strong at $35. We talk about of the liquidation prices for Solana, and we have liquidation price for Solana and ETH. Okay, so Solana will be about $22 for these big whales. So if these big whales get liquidated, it's going to be lots of coins coming to the market, which means bringing the price even lower. Of course, for us who are long-term hodlers, it's just another opportunity to D.C.A. Okay, let's remember that this is the best times for us to D.C.A. in. Guys, we are one of the lowest times of oversold in history. Okay, the place where we are now in terms of oversold is at 2011, 2015. So, and now we're reaching the same metrics as well as we were on those times. Okay, so again, I know it's rough, I know it's red, I know it's very volatile, but we keep saying to you guys every single day, please stay on the market and research and research and research, because the opportunities to change your life, they're being created now. Okay, so about the Bitcoin cycle, this comparing, I think I love tech devs comparisons. So the bottom line is the 2011, 12, 13, 14, and the top line 2017 onwards. And so we can compare where we are now. We can see that there's very much similarities, a lot of similarities from the 2011 to the 14, and then the 17 to the where we are now. Okay, of course you can see here that he's following the RSI that's supposed to be. Okay, so we are at the bottom here. We expect a little bit of rally. We can see if we're here, a little rally, then we a little drop again, and then the continuation of the bull run. Okay, guys, remember that this time frame, we don't know. It could be a couple of years. He says that until 2025 here, and we could reach if we take that this is at 2025, that we could say that this probably be around 2024. So in a couple of years time, we're gonna have to hold strong and take every single opportunity that you can for improving the market. Okay, and so yeah, the next one I want to talk about, guys, I saw Cove Duck. Yeah, COVID Duck. It's like, so Cove underline Duck. I've studied hundreds of mental models to become a better crypto investor. Guys, I think this is super, super important right now, because it's a total mental game now. Okay, it's your how strong you are psychological to hold up in these such crazy volatile times. So the only way to hold us as best way possible, I believe, is not overexposing yourself and always investing in money that you are willing to lose. Okay, this is the best way, really, because otherwise I think the psychological, if you get stressed because you overinvested, or you take money from someone else, take like people done before in the past, they took money, guys. Big investors, like I heard Bitch Boy Crypto saying he's got over 1 million subscribers on YouTube. he said that in the previous bull run, he got money from relatives to invest, and then he got wrecked. So imagine the psychological state that he was at that time, seeing all the money that he has and people's money that trusted him going down. So it's a very stressful time. So we are here for keep you safe on these times. And I think, this is very nice. I'm going to read for you through very quickly so we can analyze together. Mental models are frameworks of thinking and explanations that can help us expand our thinking. We think a certain way due to how and where we raised experiences, etc. Our minds are full of biases that narrow our thinking. Expanding our thinking can give us huge edge. First principle thinking. Boil things down to the fundamental truths and work your way up. Ask why at every step. Question every assumption. We often base our decisions on what experts, others, and society says. This can lead to poor decisions, especially in crypto. Like we always say, guys, everything we say here is not financial advice. So we often base our decision on what experts, others, and society says. This can lead to poor decisions, especially in crypto. So that means is do your own due diligence, study. So don't just take our opinion, take everyone's opinion and then make your own. First principle, original thinking. Here's my thread on first principles. Good investors see through the noise, but how do you actually do that? Think from first principles. Here's the thread. So guys, I would say for you to just go and read the first principle here of Cove Duck. Then you can have a better insight. Let's carry on, so otherwise it will take too long. The map is not the territory. A map of the world is not the world itself. It's made up of assumptions, imperfections, and reductions. By map, we mean anything that seeks to make sense of reality, descriptions, theories, models, etc. Maps have limitations. Maps are reductions of reality. It's very easy to equate the map to the real world itself. Our brain naturally takes shortcuts, and maps of reality help make sense of things. Think about valuation models. We have an obsession with using models and indicators to tell us when to buy. Guys, remember that this was the biggest problem in the previous bull run, this stock to flow and trying to get these models to evaluate. And then everyone thought that we were going to go to more than $100,000. And that's why many people got wrecked and they bought at the top. They bought Bitcoin 69,000 because, of course, they thought it was going to go to 110. Because following the stock to flow model of Plan B, everybody got wrecked, which was sad because he was going really well. But again, we cannot 100% just trust that. Stock to flow is a way to calculate Bitcoin's price based on scarcity. Stock to flow says Bitcoin should be at 110K at the moment. In reality, it's at 20K. We have an over-reliance on valuation models. Learn to interpret them correctly. Models always have their limitations and assumptions. Okay, guys, we keep saying to you guys that this world of cryptocurrencies is made up. It's assumptions. No one has the truth and no one knows the truth. That's why we keep saying to you once again, this never is financial advice. We assume that this can happen. Why we assume and can go right? Because we look the macro, what's happening in the whole world, in the whole crypto universe there, to have a better assumption. Everything's going well. There's a lot of projects coming up, so we expect and we assume that everything's going to go really well. But then we never know, like when something like happened to Luna can happen again. We never know, okay? And like happened to Celsius again, we didn't expect anything that happened again so soon, and it's already in play, okay? Crypto is new. Old playbooks don't work the same way. The market volatile, uncertain, and is getting slaughtered. Don't put all your faith in these maps. You get burned. All models are wrong. Some are useful, okay? So again, do not put all your cards on these kind of models. They're not. All models are wrong. Some are useful. They are useful, but they're not correct. Okay. Second order thinking. Deliberate think about implications of an action by considering future consequence. Let's say market goes up. Consider the consequence. If you FOMO and want to buy, if you do, you are liquid and can't capitalize on anything else. Other retail investors are probably thinking the same. You become exit liquidity. The further you consider, the higher the likelihood of success. Ask, what then? Consider different time windows, 1 day, 1 year, 5 years. It's deliberate and hard, but it will set you apart. Okay? So guys, this is like, again, check if you're following, if you're following everybody, if you know what you're doing, if you're gonna take your profits, okay? Everything put in place before you do it. Probabilistic thinking, estimating the likelihood of something happening and act based on odds. Crypto is a game of probability and speculation. No one knows what's going to happen next, but successful traders and investors make bets based on probability. Consider the different possibilities for a token and come up with probabilities. Up 20%, sideways 30%, down 50%. How do you come up with these probabilities? Macro and other news. Past performance can give you some clues. Okay. So again, so he says that the best way for you to work is probability. Is probable that it's going to go up 20%. So if you have this probability in play that can go up 20%, but can go down 50%, and you still invest, then you're probably going to be sane when it goes down 50%. Okay. It takes time to get good at this. Kobe has a great post on this. So again, guys, I'm going to leave this thread on the comments after, so you can follow and read everything else. It's easy to skew the probability in your favor and overestimate, so be careful. There's a lot more to cover in probabilistic thinking. I'll make it separate thread soon. Guys, I think this is amazing. Same thing happened to me, really. I was always looking on the, like, it's easy to skew the probability in your favor and overestimate. That's exactly what happened to me, guys. Full disclosure here, I overestimated my gains and all this, and it didn't work out very well for me. Again, I'm very happy because I'm for the long run. I'm D.C.A as much as I can on my positions, on everything that I have, and I'm very heavily invested in altcoins. I'm gonna say to you, and many altcoins. I'm invested in gaming altcoins, in the all the layer ones, some layer twos. Okay, and that's it. But I trust the process. I trust the process. Occam's razor. Among competing hypotheses, the one with the fewest assumptions should be selected. In other words, the simplest explanations or solutions is often the correct one. When there are two conflicting explanations, the simpler one is usually preferred. Occam's razor, your theory is too complex. So we like to overcomplicate things and come up with elaborate reasons. The market is going to go down because insert elaborate conspiracy. Occam's razor suggests it's usually something simple. Macro just sucks. Okay, so guys, again, like we keep trying to elaborate too much because why is this going down? But again, consider macro sucks. Is everything connected, and one thing start to go wrong, everything goes wrong. Just again, let's go strong and keep up. It's a powerful tool that helps you come to decision faster. Make sure you consider the limitations. Even the simplest explanations ought to be rooted in evidence. If evidence contradicts it, then revise. Okay. So then he has some things, more explanation about it. So another one is inversion. Think about the opposite of what you want. You want to become a good investor. Think about what you ought to do to be a bad investor. That's a very good point there, guys. So, yeah. So what would you put as a bad investor? Okay. I think a bad investor is over leverage, exposing yourself too much to one coin and to one ecosystem. Okay. This is my point. So I think if you start to think that, like, if you were too exposed in Luna, guys, like I think crypto run. He said when he started, his portfolio was very, very balanced, but Luna raised so much that I think at one point, 70% of his portfolio was Luna, and apparently he did not balance it out. Okay, so it's someone that was very clever. He was in the market for a long time. He knows people, who has a massive YouTube channel, and he did not balance his portfolio. So that means made him in one way quite a bad investor. Of course, he's an amazing investor in anything else. He's got hundreds of millions of dollars. That means he's a good investor. But of course, you can see that even people who has $100 million could do bad I'm gonna say bad investmentship. I could say that. I don't know if these words exist. You let me know in the comments. Anyway, traits of bad investors: poor risk management. Traits of bad investors: poor risk management, all in shit coins, Again, guys, shit coins is the problem. Buy high, sell low, never. Invest without understanding, blindly follow influencers. Now, just avoid those things. I'm going to retweet that because I think this is one of the best imports. Simply through avoid the bad, you can become good. Cognitive biases. Cognitive biases cue your thinking and cause deviations. Still holding bags because it's down 50%. Sunk cost bias. Fall in love with your bags. Endowment effect. The defy edge, sorry. When it's together, it becomes a bit confusing. Has a good thread on biases. I've studied hundreds of cognitive biases to become a better crypto investor. Here are 14 most important ones. Wow. So, guys, there's lots to look and to study. This is what I say to you. This is a little thing that you can take your time during every day, check a thread like that, go through, stud, trying to understand, make some notes of what's to be a bad investor, okay? And make you become good and follow us. And let's see if Casca is around. So yeah, Casca is not around. What's up, post astronaut? I hope you're doing well, my man. Guys, so I think let me just check quickly here what's Casca doing. I think I'm gonna have to do the show on my own anyway. So let's see.
Mano, eu tô enroscado aqui terminando o trabalho. Tem que traduzir um pouco o trampo aqui. Se consegue fazer aí, eu vou tentar entrar.
Yes, guys. So I think you heard that. So he got caught up in work. Yesterday, I was caught up in work as well. Actually, I had a dentist yesterday. I think I told you guys the case a couple of months ago where I have to rush to the dentist. I just have to finish my treatment yesterday. So post astronaut, thanks so much for being with us again, guys. Again, check the timestamps for the video, okay? Because everything going crazy. Hopefully you enjoy the show and see you very, very soon tomorrow.